Hi, I'm Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate and keep clients aware of what we are seeing on a daily basis. We're going to cut to the chase very quickly here and show you what we are seeing intraday. It's a little contradictory, not necessarily contradictory to what we've been saying in the past, but we want to keep people aware of what we are seeing. This is not financial advice. Really, this is meant to be a direct conversation with many of our clients. For conservative investors, this really doesn't change much for you, but the growth, we are backing off here. So we want to show you a few things and chat with you. So a few things that have changed in the last day. Not really as much has changed. We've been looking at this from a broad base, but really we did back off at 3 p.m. today. So let me give you the full scope. Sunday night futures, it did exactly what we thought it was going to do, and we commentated on it. I said, hey, futures are probably going to go down hard red in the morning. And if you want to look at this, I'm happy to show you. Monday, this is today. We are intraday right now. 826 overnight futures fell. S&P went down 1.4%. That's exactly what we wanted to see. I wish we would have seen a little more pain, a little test lower. I wish the VIX would have spiked more. It did not. Sure, you have the president saying and tweeting, hey, things are much better. Who knows if they actually are? Don't trade on any of that nonsense. But for the second time in a row, these abrupt tweets sent the market lower after a Fed meeting. Again, ignore all that. Not a big deal. Basically, we're 5 to 6% off. Now, intraday, we are actually doing pretty well here. As you can see, the market is up. It's actually trading much lower than it was, so I'm glad I did what I did. I got out when this was right around 1 or 0.9% up. Again, I'm not directly investing in the S&P 500, but I use it as a gauge. And why I did that is for the following reasons. So hang in there for a second. We're going to go over these reasons so you can see, not necessarily see them, but hear about them. Sentiment, number one. Sentiment, I'm a contrarian there. I want to see as much pain during those times, as much pain as possible. We really did not see much. I wish we would have seen more. We probably should have seen more. The VIX, that's further down on the list, but the VIX, we're kind of in no man's land with the VIX. It's a fear index. I wish we would get out of the 20s and stay there. We're just not there, and I don't foresee us getting out for a little bit. We saw low volume. That's not what I wanted to see today. I wanted to see higher volume off a big dip on Friday. It's a very low volume day on basically everything that I'm seeing. Again, I'm looking at, let me show you a chart real quick. 1 second. I'm going to shift gears here to the inverted yield curve. Again, this is not something you trade on, but it's something to keep aware and something to keep in mind. The 2-year is probably, we are now 14 minutes away from a close with the 2-year being and inverting, the 2-year being greater than the 10-year. Sorry, it's been a crazy day, and I just want to make sure I'm doing this even keeled to show you this is a lot of research, and I have a lot of research behind this. This was not an out of nowhere decision whatsoever. So just wanted to show this to you. This is a realistic perspective, probably going to invert. Again, I'm not necessarily trading for that reason, but people will probably do something stupid and sell. So if I can save a few percentage points, I will. I know in the back of my mind, and so do my clients, they should, if they have listened to a few of these videos, that usually when this inverts, you have about 1.5 years and a 15% rate of return before there is a recession. Again, who knows if that's going to happen, but in the short term, futures will probably turn ugly. And as you can see, I mean, this 30 minutes ago was 1.1% high. I mean, we are selling off here quickly. Does not surprise me. Again, if I can save a few percentage points, I'm going to do that. So in short, I'm basically seeing the risk reward kind of going away here. I'm not really seeing a ton of reasoning to be in at this time. Could it go up tomorrow? Yeah, Salesforce reports, they usually report well. I just sold them. It's just not the risk reward environment that I want to be in. Short term, again, the environment is very good. The environment is very good midterm. And that's what I want to make sure people understand. Like, this is very short term. This could be 3 days, a week, a month before I get back in. So I really like what I'm seeing, but not short term. And on an up day like this, I'm going to take some gains. Understand too, we got in on August 5th with 40% of our portfolio. That is up, almost 3 to 4% when the market was down 5%. So I have some wiggle room there, and I'm happy to take some gains when they're had at times like this. So other reasons why I also sold was an oil diverging from stocks. It's just kind of interesting. Again, risk reward. Technicals are in no man's land. The VIX, which I wish were a little bit higher at this point. And again, low volume. So for many reasons in the short term, I'm not seeing the risk reward being worth it. So I'm just going to get out, sit for maybe a couple days, maybe a couple weeks, and get back in. Again, long term, we do not want to be outside of the market. I am not freaking out here. I like what I see midterm, but I see value in trading this if I can save a couple percentage points. So I hope that helps. Let me know if you have questions. Again, this is primarily for clients specifically, but wanted to make sure I kept you guys aware, knowing that was a bit of a change in our thought process. I was hoping to see higher volume today. It did not happen. But we did get the move higher, which was expected. Right now, we're in no man's land, and to protect confidence of clients and myself as well, I'm just not seeing the risk reward being worth it at this point. Midterm, I really like the environment here, though. I mean, we're cutting rates globally. We're probably going to have low expectations going in to the next quarter, but we just need a couple weeks. There's really not a ton of big earnings this week or the next couple weeks. End of summer, just low trading volume. I'm not seeing how we go much higher from here. And so I'm just like, let's just back off for a little bit. So I hope that helps. Thanks again. Talk to you soon.